Hey traders, what's up? Jamie Saettele here. It is the midweek strategy webinar, even though it is uh, Thursday, so more like the second half of the week. But as you know, when we have things like FOMC on, you have to pardon me. I'm gonna have to clear my throat probably throughout this webinar. Um, but when we get stuff on Wednesdays, prefer to kind of wait to do the webinar. So I'm gonna start with stock markets. We really haven't looked at things like the S&P and whatnot in a while. Markets trading pretty heavy, right? Over the last week, really, since last week when we took out the so-called big 20,000 Dow. And if you saw the Barron's cover last week, we had the what was it? The 30,000. Here we come 30,000, right? So look, how big of a possible turn is this? Don't know. The thing I'm looking at here, which was posted on this is updated on the weekly long-term chart, but we came into this level and essentially 22. What I have 20. Oh, on the index it was 2204. This is S&P futures, but we'll get to that in a sec. So something interesting's happening here on the equity markets. So here's futures, and you've got 1, 2, 3, probably 4, 5, and then A, B. So I'm actually thinking that we trade up above this level, 2285. Okay. And then essentially that would put the cap on the rally, and you'd have a big leg lower after that. So I haven't seen anything clean like this in a long time for equity markets as far as a bearish count off of a high. Okay, and that's what we have here. Again, 1, 2, 3, 4, 5, A, B, C. Some I know would say that maybe this is A, B, C. The reason I'm putting this as 3 of 3 is it's the most extreme, and that's typically how it works. And 2, when you look at the take a look at the cash, in other words, the index markets, and you have those look like they need another leg up at 2, right? So in that case, you kind of have this 1, 2, 3, 4, 5, and then maybe A, B, one more move higher, C. So who knows? Maybe this sets up for at least for stocks, kind of a a NFP day rally, and then a complete just puke in the markets. And we'll get into why obviously we would want to talk about this in the first place, because as it pertains to FX, this is the Dow now. Same thing, right? 5 down, A, B, and then maybe one more move higher, C, expected to fail up around 19,976 or so, which might actually even be the 618, and a little below. But this whole scenario certainly would fit quite well with moving into kind of a trading environment that, to be honest, we haven't really seen in a while, and that is the actual risk on, risk off with yen leading the way, right? We have not seen that in quite some time. The yen, for example, like dollar yen, peaked back in December, right? December 15th, kind of the general dollar peak back then. Now you're starting to see equities come off. So if you do have this count that I've presented in the S&Ps, essentially you're going to come back into play with, the Japanese yen S&P relationship is going to come back into play. So we'd be looking at, again, we're kind of looking for a bounce in dollar yen down here, right, from last night's report. But if I bring these into, so we have, let's put up dollar yen, and we will put in the S&P futures. All right. So what's that showing? A daily chart? So it might be, because I have to compare futures to futures. It kind of gets kind of tricky when you're doing different exchanges on this platform. So what we've had, obviously, we had the top in dollar yen, which was the bottom in yen right here, very beginning of the year, or you could say it was back in December 15th. The correlation's really been non-existent, right? But that might be about to come back into play as we're showing an impulsive drop in equities. So again, squeeze out one more rally in the S&Ps, but not to a new high, and that would correlate with a drop in Japanese yen, which would be a bounce in dollar yen, and then we go kerplooey, kerplunk, or what have you. So that's my story with the S&Ps, and I'm sticking to it for now, right? Okay. So that's the S&Ps. What about the Nikkei? When you're talking about yen, you always want to look at the Nikkei. So the Nikkei, so here's a 240-minute chart. We actually still have, there's still some good slope here on this to bounce off of. Go to the daily chart, actually. So top on the median line, still holding up very well compared to dollar yen. Dollar yen, of course, is just actually went to a new low today for the move, dropped under the January low, whereas we did not do that with with the Nikkei. We're holding well above it, and we're still supported on this parallel right here. In fact, 2 of the last 3 days are on it. All right, that's just a parallel that extends off of the 118 low. So there's another reason to suspect that a dollar yen full-on breakdown is not necessarily going to happen in the next day, right? And that you're going to get a little more back and forth, a bounce in dollar yen, as Nikkei still above support and could still fool around up here. So looking at it from that aspect as well. Also, of course, when we talk about dollar yen or yen crosses or anything, we need to be looking at a chart of gold. And gold, as you know, I was looking for something quite different than what's just happened. I was looking for this to be kind of like A, and then we're going to fail up here somewhere, and then turn over and head down to 1171 and then rip. But we've gone higher to a new high, and I don't, look, what could be a flat, I don't know how long you want to end up kind of fighting this, but remember the old slope on the gold chart, which was right here? We're kind of at it now, actually, right? Remember, this was the slope that we had followed for a good time. Okay, that we had, this was support here, we had support here, resistance. They were just good parallels to work with. So with that said, when you have something like that that works out so well, you come back and you tag the underside of it. Essentially, I'm looking at this as resistance, not just because of this trend line. Does it sound okay, everybody? Conwall just made said the sound. Just make sure that you guys, let me know real quickly, please. Sound good here, says Doug. Okay, great. All right, so yeah, here we have the gold price. So resistance, again, looking for a pullback here, but with these parallels working the way that they did work on the way up back here, what you want to do is you want to extend a parallel down, okay, and you place it at the low and keep an eye on that level for, again, for potential support, okay, wherever it may be, come into play. It may not come into play anytime soon. It may be that you fool around up here and that you ease sideways into it at some point, okay? I'm just saying you want to follow, you want to have a handle on this level here, all right? I wouldn't necessarily draw, say, a new trend line to work with just yet, okay? Because you're still respecting these lines. They're still working out quite well. So the angle of influence is still on these levels. So we have that. And then, of course, what I wanted to point out, the first chart is the fact that we actually came into today's high. I did tweet this out earlier. Today's high is 1227.50. The election day close is 1227.40. Okay, that is a really big level, and not just because it was the election. All right, that itself actually I could kind of care less about. The fact, I mean, it was the election was what, you know, is why it was the event, but the fact that, you know, it's important to me because, oh crap, I just erased that, because it was the highest volume that week, the election week was the highest volume done in gold futures in 1 week ever. Okay, so I'm going to do here is point out, so you know how we look at high volume levels. I talk about them all the time. I wrote about them last night in yen. Well, you can do it on weeks too, and those are the really big ones. So here was your volume on the week of November 2016. Okay. The next two highest volume levels, okay, happened the week of April 19th, 2013. Look at how that level actually wasn't right away, but it came into play twice at later dates as really big resistance. And again, this is not necessarily to the tick, right? You did go through it, but it's hard to argue that this would not have been helpful. So this is something that you want to know. You want to know where this gold level is on your chart. You want to know that that price is, you know, it is what it is, and that it's an important reference point moving forward. The next highest volume level ever was actually the week into the blow off top. Okay, and look at that price, the close of that week going forward. That was resistance, actually, about not quite 3 months later. Okay, so this is one of those things where you just kind of want to know what that price level is. And, you know, it's 1220, what did I say, 1227.50. See, we're getting a little dollar bid action here as Europe closes. Delayed response, it seems like, again, with dollar, yen, and gold. Gold had come off already, almost $10, and dollar yen not really doing a whole lot, but maybe it's picking up here. I don't know. I like the level. So yeah, 1227.40 is your really big level. So just kind of write it down on a piece of paper, keep it handy. So those are the big things. Okay. Now I'm going to go into what I usually do, which is just kind of taking a peek at, you know, some of the majors. There are a few crosses that are interesting, but right now I think it's important to kind of concentrate for the most part on dollar majors, given the themes, and then I'll go into questions. I know Conwall likes you know, to look at some of the commodities, of course. You're looking at silver and everything else. Copper, absolute. We will definitely look at copper. I actually had that on the list anyway, so we will take a look at copper. All right, so we'll start with euro. Just get it out of the way. Euro's been rallying for seems like it's been rallying for has been rallying for a month, but it hasn't really gone. It's not like the biggest move, right? I mean, we've gone from 103 handle to we touched 108 handle today. So an okay move, but I mean, it's been choppy as all hell. And I'm still following this thing, the analog that we kind of presented a bit ago, a week or so ago, I think. And this is the 2012 one, okay? And it was really similar, okay? And I remember this well because it was choppy and everybody thought it was a wedge, right? Everybody thought it was a wedge and that, the wedge you're going to break down from, right? In the previous downtrend. Well, it ended up being that we absolutely exploded to the upside. So here's the kicker with this. The explosion part to the upside actually would be start sometime next week, maybe actually even Monday, Monday or Tuesday. And here's the thing why. So what happens is, think of the psychology of this. You have this wedge, right? The market starts to break down, looks like it's going to take out the bottom of the wedge, and then it just traps everybody and springs a massive bear trap and it just goes ballistic on the upside. I can see something like that happening here. And if we go back and look at what the euro actually looked like back then, why don't we do that? And you'll see exactly what I mean. And you'll see, because then we can compare it to the current situation too. Kind of what the setup looks like. All right. So get rid of all this shit. All right. So back at the 2012 low, this was it right here. Okay. This was the 2012 low. And you can see how you would think it looks like a wedge, right? Here's your two little barriers. Okay. Something like this, whatever. So what we could be coming into is like this day right here, Monday. What people often fail to kind of take note of is the fact that, yes, a wedge is typically going to resolve in the area of the prior trend, but you can have what's called a running wedge. And a running wedge is when you actually break, it's actually the beginning of a move. And when you break out of it, it gets real, real intense, real fast. And we could see something like that here, right? I don't think it's that crazy considering where we're coming off of dollar-wise from these huge levels in the long-term cycles and everything else. Don't get me wrong, I'm expecting us to pull back from here in euro, like right now. Okay, we've come into a really big area. You just look across the chart, you can see that it's been big for a while, going all the way back to, May of 2015, the 108.20s, okay, here, and 108.50 up here, 108.75 is ECB spike high. But if we draw in, where to draw the wedge lines here, right? Because you draw off here, you're drawing right off a spike. I don't really like that. Probably just draw it like something like this, okay? So basically, this is your area. If you start to get above here, you're at real risk of really accelerating to the upside, okay? Big time. And the next level would be about 111.90. Here's a crazy thing too. The median line, look at where we are. In this was the wedge back then, and this is the thing we're looking at now. We're essentially on the same plane as we were on the slope. In other words, the wedge, the first target on there was the median line. The first target here would be the median line too. It's literally the exact same setup. So not a prediction, but the setup, okay, is to look for a sharp down day reversal, but to watch for support to hold. I would think maybe like 106.50 or so. And on that, 106.50 or whatever level that I just noted, what you would want to look for is watch the 20-day average. Okay, it's currently, this is again the 4-hour chart. I'd like to look at the 4-hour chart, and I throw a 120 period average on there which is 20 days on a 4-hour chart. But the 20-day average is just, it's been lights out, okay, so far this year. So if we get a slam down into there, which would be a nice dip from here, right? You're talking over 100 pips. You've got good structure as far as former highs for former resistance that could provide support. So strong drop there, and then would be thinking about a long position. Okay, and the good thing with this setup like this is you have very little room for, you're giving yourself kind of trading around the edges. You're not going to end up taking a huge amount of risk on this. All right, so there's Euro. Euro, Swiss franc. One reason to be very cautious right here, you could even try to put on a short position right here in Euro, is the fact, although I'm long dollar yen, so I'd rather play it that way. But so you see how Euro just now made this new high, and Swiss francs did not. That's that little non-confirmation. It's kind of a warning sign that you're going to get a pullback in the dollar, or a bounce in the dollar, pullback in dollar Swiss, pullback in Euro. Okay, moving forward. Pound's probably the cleanest right now, and that's not a surprise given the volatility. So, volatility clarifies, right? That's what we like to say. So it looks like at this point, and good thing stop was trailed, because otherwise we'd just be giving away stuff here. So what I want to do is throw a 5 on here. We're counting this as 5 waves up at this point. Okay, 1, 2, 3, 4, 5. Within 3, 1, 2, 3, 4, 5. Okay, so we have a beautiful 5-wave affair on the upside. Tells me that we need a 3 back, and we're probably just about done with the first of those 3 backs, because when you go into your 10-minute chart or really short-term chart, you can count 5 there. 1, 2, 3, 4, 5. You see how great the volatility is for someone like me. If you were around last year, for example, I didn't really actually do a lot of short-term wave counting, because everything was a damn mess. There was really not a lot of waves to be counted. And the worst thing you can do is try to force the market on, force your count there. I mean, this is clear as day though. Okay, this is 5 waves. So the next move here is to sell a bounce. You want to sell a bounce because you have 5 waves down. You're looking for a recovery high B, and then the next leg lower, in which you'd probably be targeting actually maybe back down near 24.11, which is where we had bought earlier in the week, right? And the reason you target there is because that's the former 4th wave. Okay, so 26.10, good looking resistance from my vantage point. And I'm going to do here, is just really point out how big and useful these levels can be. All right, so 2610, you can see resistance, support. So watch it for resistance. Okay. And then, yeah, again, it would be looking back towards the range lows in the 24, 10, 30 area again. So that's the story with cable. So this is actually a trade that could set up on NFP, because if you get, just thinking, kind of the way it's setting up already, the fact that you've got this 5 waves down, we know a lot of times, not always, last month, for example, wasn't really the case, but a lot of times the right move is to fade the NFP initial reaction, right? I think this is probably set up for that pretty well, because you get a bounce on an NFP reaction, let's say, even if you don't get the bounce right away, let's say you get a little quick spike lower and then the bounce, right? You want to fade it. Regardless of whatever the NFP number is, I probably want to fade 2610, sell 2610 on NFPs. That's what I'm looking at here, folks. So let's keep that in mind as we head into tomorrow. We look at the longer term chart for British pounds, and again, I think you have to be constructive on a very big picture time frame, right, with the double bottom type of deal here, and just really something as simple as a 13-week average. Thirteen-week average, okay, works really quite well at times. It's not the holy grail, nothing is, but you can see for the most part, it's acted as support during big moves higher. During this trend, which was so strong, it didn't even touch it. But, during 2015, it was resistance on the way down. Got real tricky here, obviously, Brexit, but even the post-Brexit bounce, it was resistance. Say it was resistance here in December, and we've moved above it after being resistance on early in January, and it was support this week. So this is something that I would kind of look at, maybe make a note of, to look at on a weekly, a weekly closing basis or something. Just kind of, look at the chart at the end of the week and say, where are we? Are we above or below the 13-week average? Because, we just crossed above it, and for, been below it for a long time. It's been resistance for a long time. If we can hold above it, great. So intra-week, if we come below it, I don't really care all that much. In fact, it would probably be better for the long-term bullish potential if you did come below it and then get back above it on a weekly close. And again, 24.29 is the crash week close, which is your daily or weekly reversal and daily reversal, because it was on a Friday, support. So yeah, trading levels for cable tomorrow, 2610, 2430. Moving on. Not really going to go through yen. I have talked about it kind of at length and wrote obviously a lot about it last night. You can check that out. I will note that the setup seems to be working out so far. This is the futures chart, and we did come into that level. We actually took it out by like a tick or two on spot currency and then now we're coming back off. So that's good. And that's why the stop was wider, or as wide as it was, not just below the dollar yen low. So yeah, basically looking for that dollar yen bounce and then sell it next week at some point, maybe earlier in the week, especially if we get a good bounce heading into tomorrow or Monday. Aussie, I'm not going to lie, folks. This took me by surprise. The move that we had was this big. If I knew it was going to be I mean, I didn't put the target at 76.20 because I thought it'd go to 77. I thought we were going to stop at 76.20. Aussie, look, we are in the big area here, okay? You can see it probably even better on the weekly chart. And, you know, I came to the year saying how much I like Aussie and everything and copper on the upside, kind of as a theme for the year. So that's why I have not even been, that's why I haven't even tried to short Aussie. I'd rather be buyer on a dip, okay? That dip should come at some point. But I do want to present kind of a way to look at this that maybe you haven't thought of, because in the event, so here's Aussie. Okay, we do have the big resistance here. This is the slope level. All right, 77.08 is the weekly reversal level as well. But here's the thing with Aussie on a weekly chart, Aussie dollar, the 52-week closing high is 77.19. Okay, you know the last time that we made a weekly closing high? 288 weeks ago, right here at the high. In other words, we've been in a downtrend for that long. That's the longest such streak, I think, of any major that I've looked at. Okay, let's compare that to the opposite situation. Aussie, when it broke its downtrend in May of 2013, or it broke its uptrend, excuse me, in May of 2013, the last 52-week closing high it had was actually all the way back here at the low of the financial crisis. And guess what? We still haven't made a new 52-week closing high. In other words, by this most objective definition of trend, just a 52-week high and low, we will have, if we close above 77.19 on a weekly close, so it could be tomorrow, you're going to end up completing the downtrend and starting a new uptrend. So the risk is that you really take off higher. Look, I don't think that happens. I think that we end up pulling back some. But how deep is that pullback going to be? You don't want to sit there waiting for a pullback that never happens. So you have to have a method to potentially, get in the trade. Okay, and here's a way to do that. I'm gonna. Where do I have this chart? I think I have it over here. Yeah. So here's a way to do that. Okay. So you remember our real simple trend line back here, right? And I love, best entry method is the breakout and then come back and retest on it. This was NFP, by the way, in January. So when you get these original slope lines working so well, two things to watch here. So you can see all that, how that touches so precisely. Okay. Well, you've also got this. Okay, because these levels, for the most part, held up, and then more resistance on the way down. So what I would do, my personal opinion on this is that, Aussie does pull back, and that we get a deeper pullback, to kind of correct some of this stuff. But Pooja's saying, have you covered Kiwi? No, I have not gone over Kiwi yet. I'll do that next, actually. So what you want to do with Aussie is pay attention to these levels here. Okay, pay attention to these slope levels here, preferably this lower one because it's off these supports and it's just a little cleaner, right? Touching all these levels so cleanly. And then, throw on, see where the averages are. Oh, probably way down there. This is like a really strong move. So throw on a 10-day average. you can see that you're not touching the 20. So follow the 10 and see, as this pulls back, what it looks like, what the decline looks like and everything. And if you can find support on one of these parallels, and if you can, and you start to put in some, maybe some 4-hour bars that look good, you might actually have an opportunity to buy it, take some off, on a range test, and see if you can keep some for a gigantic breakout. Okay, don't get me wrong, we are at resistance. I'm not saying that we're not. We are. But the understanding of where we are in the big macro picture, the big potential for this is that it shocks the crap out of everybody and really doesn't pull back much. And so I have to be aware of that fact and, have a plan for how to handle it, right? So that's what I suggest doing with Aussie. Okay, let's look at Kiwi. So Kiwi, Conwall, I'll take a look at CAD and crude, of course. Let's go over Kiwi first. So Kiwi is one that I actually don't mind shorting. As we came into the year, I was fine with potential, Kiwi short for the simple reason that Aussie Kiwi has been bottoming forever. And we do have really good resistance up here. Don't know if it'll work out, but we have good resistance. So, there's a couple of factors that went into this trade. The major one being you have huge resistance up here, right? And you can look at the long-term page anytime, of course, to find these long-term levels, but this is where this pitchfork comes from, okay? We're going all the way back here. It's 2011 high, 2012 low, 2014 high, and you can see the lower parallel hits the low, and the 25 line on this was resistance at last year's top. Well, we just came into it again after almost making low at the median line, which is what I was looking for back in December. So we're all the way back here. Good resistance. Okay, that's kind of one of the first things you want, right? If you're going to be shorting, you want some resistance. And we reacted to it. We came off. We go to the 60-minute chart. Reason to be short even more so after you have 1, 2, 3, 4, 5. Kind of stubborn today, right? But at least we know where the stop is. And finally, the reason I said that I wanted to take some off at 72.82 is because you see this bar here? That's the 2-1, that's the FOMC bar. Interestingly enough, if we look at the volumes in yesterday's move, nothing made a high volume bar on FOMC except for Kiwi. Okay, Kiwi made that high volume bar. The high volume bar before that was this high, which is the high hourly close, and that was the 73.30 area. That's where I originally wanted to short, and then I moved it down to 73.10 because I was afraid it wouldn't get triggered. Maybe I should have left it at 70.30, but whatever. Actually, I'm fine with the decision that I made. But previous high volume before that was this one, which, as you can see, was support on the way up too. So basically, I just want out of some of this trade at 72.82. Okay, so get down there. If we come back below and say we get down below it, we're down below it sharply, and you trade back into it, you'd actually look at that level as resistance again. Okay, so it's just a good level to know, 72.82. And this is short-term stuff, right? This is not like the big gold chart I'm talking about earlier. So yes, that is the deal with our Kiwi chart. With Kiwi, you also have the short-term slope that's still working quite well. and which does raise the question of whether or not you are in this uptrend still. The fact that we have failed where we did today is a good sign, because we failed below the upper parallel, which you can see top ticked it the other day. I wanted to short at 73.50 or 73.43, but if you recall, do you remember this right here? That was the, I think it was like CPI or something that was coming out in New Zealand. What was coming out the other day in New Zealand? Was that Tuesday? Let's see. Unemployment rate. It was their jobs numbers were coming out. So with their jobs numbers coming out and you're just shorting, you're just gonna like put your resistance, you're just gonna gamble and just put on a trade right into the number. I wasn't really gonna do that, but I guess it would have worked that time. Anyway, so we have failed below the upper parallel, which is a good sign, because that means that you have the potential for, you know, a lower ceiling. Now it doesn't always work that way. You had that here too, but then you found a higher floor here, right? In this case, we went all the way back to the lower parallel, almost broke it, and then found, you know, found the resistance up here near the median line, and we're coming off. So it is a good sign. So far, so good with the way this is, you know, working. All right. Okay, how about I like how that's coming off too. Look at Aussie. Dollar CAD, I mean, you know, same old stuff here, folks. I wish I had some insight for you, that we were about to rip to the upside on this, or that crude was finally going to roll over. Last week, when we did last week when I did the webinar, this is pretty classic that it's Groundhog Day, right? I feel we've been here before. It's like the same thing over and over. This was last Wednesday, right here, and we put down this reversal bar, and or Thursday, because I think I did it Thursday too, and we came off, and I was like, that's got to be the beginning of the move lower in crude. Well, no, it wasn't. We went higher again. Today we are coming off again, a little higher than where we were, but these are actually the daily highs. Okay, right here, 1228, 1.6. So really, it's actually, well, 1.3 is still the high for the year. So yeah, it's holding up stubbornly in the face of, again, the record speculative positioning. If this does get going on the downside, it's going to get real ugly real fast. And if that does happen, one would think that you do get some sort of influence and get a bid under dollar CAD. Again, this is the chart. It's not really much else I can say about it, other than the fact that you are continuing to probe on this level, right? And how well is this square root relationship working out? Again, 1, 2, 3, 4 square roots from the opening price. Today's is the low on it, literally to the tick. Low is 79. The square root relationship is 78, 29.78. And we continue to hit it and rebound off of it. So the way I'm looking at this is the same as kind of how I wrote about it last night, and that is I would be looking for basically a move up through this trend line here to get you bullish. And here is also a way that you could end up doing some, to maybe help you prepare for a trade. So what we do know is that we have, if I go to the daily chart, This is what I know. I know that we are at support and we've been trying to break it, but it hasn't broken. I do know that if we break support, we probably aren't going to stop until we get to about 28.70, 28.80 or so. Okay. Again, that's the real long-term parallel that goes way back here. Okay, that's off of this level, and it was support for the lows in 2015 and 2016. It's a big level. And it's literally, this stuff is like to the tick. It's pretty crazy. But we have this parallel now, the higher one that's off of this this low back here in, what was that? In June of 2015. And that continues to hold as support, right? Actually, on a closing basis, it continues to hold. We've been going through it on an intraday basis. So you have a floor here, at least to trade against. And so if I go to the short-term chart, I want to say, if we were to break to the upside on this, do I just want to buy it up here? If we break higher, look, you have NFPs tomorrow, okay? But what you also have are these levels here. That close is 30.37, that low is 30.17. So you have a window of basically 20 pips of 30.37 to 30.17 where you would look for support if you broke out to the upside and then pulled back. Okay. So you're kind of envisioning it and how it could play out. And that's what I'd be thinking. And again, you could end up just taking out the high at 31.68 and then that would be it. Okay, my opinion on the market is that dollar CAD goes higher than that because of the crude oil thing. But have to be aware of this not doing what you think it's going to do either. So we'll see. There's all kinds of things that could happen here. You could end up at this point, what you have here too is you have a head and shoulders continuation pattern. If you take out 31.68, you would have a failed one. Okay, that'd be bullish, but it's also a short-term chart, so it's not as reliable. You could rally up into 31.68, pull back, make yourself a head and shoulders down here and go higher. But my concern, what I'm looking at with dollar CAD, the next move for me is if we break out above this trend line and probably trade up somewhere near 31 and then pull back, I'm looking for support between 30.17 and 30.37. Okay. Volume-wise, Canadian dollars, nothing really to talk about. There's no volume levels until down here, which would basically, for dollar CAD, would be up here. Yeah. Basically right there, basically the high, I think. Yeah, it would be, because it's this bar right here. It's that one right there. So that's dollar CAD. All right. Also, let's look at some crosses real quick, and then I'll go through some of the metals and other commodities that people like to look at. But now I think also maybe after today's kind of the way the trades worked, or the way that the market's trading, you can see why I'm not too keen on trading non-dollar crosses necessarily in this environment right now. Like, pound yen, for example, the chart that I had on pound yen yesterday, I was looking for support to come in basically on the median line. I mean, we're there now, but we sliced right through it. I think that we could be moving into an environment where it will be worth trading some yen crosses, maybe not just dollar yen, because if we do have that, that 5 waves down in the S&Ps, and then we get, the recovery high at some point next week, and then you come off, then you could actually get back into the so-called risk on, risk off yen thing at some point. But in that case, I would expect to see euro rally. I'd expect to see dollar yen decline. Not so sure about the commodity currencies. So regardless, it's easier for me to manage the risk on these trades by trading them separately. In other words, by trading pound dollar and trading dollar yen one way. I might have a bias on it because of pound yen chart. It says that it might be good to buy dips on it, right? But I'd rather be long pound dollar at different times and then be long dollar yen at different times and really pick my spots, right? In this market, at least, that's the way I like to do it. Okay, so let's look at euro. One cross I want to look at is euro Aussie. And this speaks to the whole maybe Aussie isn't going to pull back as much as people want it to thing. Don't get me wrong, I hope it does. I'd love for Aussie to take a tumble here and be able to load up on a nice three-wave drop. That'd be awesome. But if it doesn't happen, you gotta be ready for that too. So let's look at Euro Aussie. Remember, been talking about this trend line for ages, but we broke the 4-year trend line. Ended up actually testing it back on the election, which was a 900 pip day. And since then, it's been all downhill. 3-wave rally, okay? 5 waves down, 3-wave rally. So what you have now for Euro Aussie is actually a situation where you can draw a line at 42.90, okay? And that's your bearish invalidation as far as I'm concerned. Because again, this median line, when you are testing a median line like this for this long, this many times, it's like any support resistance, okay? Like, you have horizontal support resistance, or you have, an uptrend, and once you break it, you really go. Well, this is uber bearish because it's a downtrend. It's a downtrending support. So not only are you in a downtrend, you're bouncing off the downtrend support, but when it goes, it's like the leaking faucet. It just like exploded. It's like the leaking faucet turned into a fire hydrant that was turned on by the firemen in a summer day when it's 110 degrees out. Okay, and this thing is just going to crash. So there's huge downside potential here, and I think it speaks more so to the upside potential in Aussie than it does anything else. All right, so I want to have a way to look at Euro Aussie moving forward. Let's put the square root levels on there, and let's go to a shorter term chart. Go to a 60-minute chart. Okay, so we're actually at a level right now, right? Square root level here, and the way I would look at this, the best way to look at it, in my opinion, put on, a short-term average, okay? Put on a short-term average, see like a 5-day, a 10-day. The 5 and the 10 are right here, right there at 41.70. As time goes on, it's going to get lower. When you're in a big sharp move lower, if you are in that move, a lot of times you will only pull back to something like a 5 or a 10-day. That's what happened back here. All right. So, that's how I would approach this, basically, is watch those averages for your levels. This is your ultimate risk point up here at 42.90, and the downside is substantial. Okay. whether you watch this, I mean, I'm going to try to watch them both, but whether you do this or do it through Aussie dollar, it doesn't, to me, I don't know, it doesn't really matter. Maybe you want to have some of both. Get interest on both of them. Short your Aussie and long Aussie dollar. But yeah. So copper, yeah, let's move on now. So I will go to the commodities and whatnot. My boy Conwall, how are you? Are you good? You doing good? Got copper here. So copper chart, we've been at this resistance for a couple weeks now, since the 13th. We actually still haven't broken the high. Remember, my thinking on this was and still is, and it's the same with Aussie, right? I'd like to see Aussie pull back more, but you have to be prepared for a situation in which it doesn't. Okay. So my thinking on this is that your opportunity to buy this is that we are going to go through a period of sideways trading here. All right. And that your opportunity to get on this or get back on a big long is going to be down near 2.5 or so, 250. Okay. Let's look at it. Let's go a little shorter term though and see if we can figure something out here. All right. Well, this is another reason to suspect that you do pull back some. Okay, so count these with me, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, right? So that'd be 1, 2, and then 1, 2, 3, 4, 5, 3, 4, 5. So you do have a 5 waves up. However, if you so wish to not, wait, look at this. You see this trend line here? This is already going to work out, I think. Not quite. I thought it was going to work out. Could be worth following that. I thought we were going to have a good slope on here, but I wouldn't even draw a new one. I would still follow this on the short term. Okay. For your short term stuff, just follow this trend line right here. You could draw another one extended off. Here's another reason why I don't expect us to necessarily go through the roof anytime soon on copper. So you can see the momentum slowing. So when you extend your parallels from your original two lows in an uptrend, and you extend it off of a high, to keep the uptrend strong, you want to see the market hit the resistance line and pull back. You don't want to see it pull back beforehand. Okay, now this situation is a little tricky because at the same time, we're not pulling back to supports. Like we didn't pull back to this support either. Okay, so it's a lot like copper. It's a lot like Australian dollar, in the sense that, I don't know if it's what I think or if it's what I hope, but I'm thinking that we do indeed try to actually get, more of a pullback or drawn out, sideways period before we really, really, really go higher in Aussie and copper. But if that's not the case, if that's not going to happen, then be prepared to act on the alternative. And in this case, what you want to do is follow these slope lines. Okay, so look here, right here. Where's your former horizontal levels? Right? Looks like they're like right here. There's a good one. Right? That's a good one right there. Look at the touches right there. So that might be an area. 265.70 might be an area to watch. This isn't an instance where I would be like saying, okay, we're going to put entries here and let it go, because that's something you want to do down at the big levels. If you do that in this case, at least put a stop under this low. All right, because there is the risk it falls apart because we are coming off of a big, big level. So there's that. Yeah, so that's my near-term attempt for you on copper. I will say, if we are going to, let's say if we do go higher, your next level is actually not that far away either. It's 278.50. And who messed this chart up? What's that doing there? It doesn't go there. Again, this is, and look how big of an area this is. Look at the low. We looked at this last week, but that low, it's 2010 low. And we've been testing it for a while, right? Is this all we're gonna get? I don't know. See what the week looks like when we how we finish this out. Anyway, Conwall and everyone that had questions on copper, I hope that helps you. Gary says, look at the abomination. Yeah, sure. So you saw last night's update, I'm assuming, Gary, the update last night. We talked about the volume trade setup, in which you have a high volume level, and you come back and you test it. Okay. We also have the analog, which continues to follow. And to be quite honest, that analog is kind of blowing my mind, because it's the opposite of, the rally from October of 1990. So we're talking about something from, over 2 decades ago. And it's the opposite of the price action. Anyway, continues to work, so I might as well look at it. But let's look at the chart itself. So if we look at that dollar-yen chart, so here's the chart that we're working with at the moment. First of all, let's see what the 4-hour bars look like. They just closed. There's a nice 4-hour bar in dollar-yen. Okay, so here is the, Gary, here's the chart of dollar-yen that I've been working with, right? This is what was published last night. Now, something that concerns me from the standpoint of, do we see a bigger bounce, is the fact that, one, we failed at 114, and two, we've got the underside of this old resistance line, which was resistance, if you remember, before the election and just after, and then the breakout, and then it was support. So that level, you need to watch that level. That's for resistance. My trade plan is not to trade everything, right? I'm currently long on this move down this morning, and I'm looking for a pop into next week. So, I'd like to be able to hold it into Monday and then see where we are, and then maybe flip, the position to a short position. But you have to look at the chart and say, where are the areas, where's the trouble area? Where are the troubles area? Where are the trouble areas? And the trouble area in this, before you can go higher, is this pink line. And it's basically 1350, 1360 into tomorrow, around NFPs and just after. But so if you get through there, then I think you're kind of home free until 115. All right. Here's another thing to look at, or another way to look at this. If we just get rid of everything on here and just look at the horizontal levels. Yeah, Canwall, no problem, my friend. I'll take a look here. I'll go a little longer on the webinar, and I'll take another look at some other stuff here, nat gas and stuff in a second. So if we just look at the levels, Gary, we're looking at the abomination. Look at the square root levels. How ridiculous these things have played out all year. We had the top on the first day of the year. We were short. Really kind of screwed that trade up because, well, we didn't get out. Probably I was looking for a lower target. Should have trusted the level. We bottomed at 1508 square root level. Went back to the year open. Came back. We had another good turn around the next square root level, 114. 114 has been a good level, right? It was even yesterday a good level. Wave count 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Should expect a bigger bounce, right? It's kind of hard to envision because everything feels like the dollar feels like it wants to go to hell, but that's just the right time for it to happen. If we look across the chart, we can see that this area is obviously somewhat important, and that's 111.35. Okay, so I have, I'm long primarily based on the volume analysis, because those volume trades do tend to work out. At least you usually get a pretty good reaction initially on it, such as we had right now. And good thing is you can move your stop a little closer or even to break even after a lot of these trades. But and I'll probably do that if we get up into 113, 113.50. But if we do fail, if tomorrow NFP comes out terrible and the dollar takes an immediate crash and burn type of deal, which is something that you should consider, with the dollar's been in a downtrend now for a month. It's been a weird downtrend though, right? It's been very stair-steppy, very start and stop, right? Kind of every time it turns up, you think it's going to go a little higher for a deeper correction, and then it turns right back down again. And every time it goes down, you think it's going to accelerate, and then turns back up again. So, if we do get a kind of a capitulation on a bad NFPs, then something I would be aware of would be 1135, right? That's the low from late. It's 1128, I believe. Yeah, 1128 low, and then you have the high here. Now, bigger picture, the charts, and this is why I love the big picture charts, because you get away from all the BS. Remember, if we go to the weekly chart here, first presented this back late in the year, and it turns out that we could be following this for a long time, because you have the median line at the high, right? So, the ultimate buy on dollar yen at some point, it could be on this level, on this line. This is, the 25 line, which here and resistance here, it could be at 110, 65 or so. So, we'll see. But, my trade right now, right here, right now, I'm on the long side, looking higher. don't know if I really want to hold this into NFPs or not. See what happens the rest of the day, I guess. Yeah, and then we were looking at Matthew talking about Aussie Kiwi and Euro Kiwi. Yeah, Aussie Kiwi maybe a little more than, actually, here, let's take a look at it. Gary, thank you, my man. It's too kind. All right, let's look at Aussie Kiwi. So yeah, Aussie Kiwi, you're getting a big old weekly bar. Is this it? Are we done? Can we finally move forward? Forget about this bottoming process and just go higher already. Yeah, so to your point, Matthew's talking about Aussie Kiwi and Euro Kiwi as possible setups here. You're absolutely correct. We've actually gone through this is the parallel, all right? And I would look at support probably going into tomorrow at 104.64 to 104.84. You get the lows here, you got the highs here, okay? Yeah. Or we can just try to short more Kiwi and buy an Aussie dip and do it that way. Euro Kiwi, I don't know. That thing's certainly pissed me off. I guess it's not a good thing to say because you don't really want a currency or anything to make you angry, or a trade. But yeah, I've been trying to think this is turning for a while. The thing is, when this turns, it goes. I mean, if you get Kiwi going one way, you know, especially from a top, it goes hard. So yeah, it's something we don't want to give up on. I agree. I'll look at it though after the week's over. Let's see what the weekly bar looks like there. All right, finally, and then I really do have to run, but let's look at, I'm going to pull up a, real quickly, we had talked about Conwall, had talked about some nat gas, and I think some silver. So let's take a look real quick there. Okay, so the silver chart. Silver's been a good looking chart, hasn't it? Yeah. All right. Broke that trend. Still kind of fooling around on this horizontal level, or not horizontal level, on this upward sloping level. Okay, and you see the line with the blue on it. Like I'm a silver bull. I like silver higher. Okay, but silver has a way of, well, like any market does, but I feel like silver is really good at it. It sucks you in, makes you think it's going to go rapidly, markedly higher quickly, and then it dumps. So with silver, I'm very, very disciplined to only get involved at support levels. And in this case, the line that has the blue circles on it is really good support. Support this week, actually. Okay. So that's still your level to watch for support, even though you broke this trend line, which I really don't even consider a trend line because it didn't really touches two highs. So forget it. That's your area. Okay. That's your area to look at for continued support if you pull back from here. If you don't pull back from here, okay, fine. You get higher. Your next level on the upside is right here. Okay, and then you know what? This line becomes support. The one that has the circles on it here that was support back in June, and then the resistance here in December. Then that becomes support, and that should be a strong support because that was former support and resistance. Okay. And finally, nat gas. Nat gas, a trend line on this. This is log chart. That's not a log chart. So here's what I'm looking for. I don't know if we get, we could go a little lower, but look for this trend, look for this line to hold. Okay, see what a measurement would do. That'd be pretty deep. That would break it. Look for this line to hold on nat gas because 61.8 is just there too. We're holding a gap right now, but you want to see if this you want this trend line to hold. I'd like to have seen that hold, but it's, here you are kind of teetering. You want to see this trend line hold, and if it'd be my guess that it does hold because you poked through the high on the channel. It did not, you went through that level, and so that's indicative of a strong move. And whereas the opposite situation is where you falter shy of the line, and then when you pull back, you're at more risk of breaking. Okay, so this tells you that you have good momentum in this move because you went through it. So you'd be looking for support when you came back into it, and just the chart, it kind of says that the 295 area is good. You have resistance back there, and then former resistance here in July. So that's what I would be looking at on the daily chart here. Any supports, any drops here is bullish, higher. Okay. All right, so I am really going to end it here. And everyone take care. Have a great rest of your week. Good luck tomorrow with NFPs. We'll have some stuff out tonight as always. Remember what I talked about early in the webinar, what I'm envisioning, the best NFP idea at this point might be to actually just sell if you get a good bounce in cable, because we have 5 down here and you get a bounce and you get 2610 resistance. So that might be the way to go just right off the bat here. Okay, I'll write about it though tonight. All right, so everyone, thank you for attending. Have a super great rest of your week and be safe. All right, bye.